All right, good morning, everybody. I'm Jeff Richards, one of the managing partners here at GGV Capital. Thrilled to be with Ellie and Mike. And Ellie, maybe it'd be helpful just to start out with an introduction from you, and then we'll ask Mike to do the same.
Great, thanks, Jeff. I'm Ellie Mertz. I'm Vice President of Finance at Airbnb. I joined the company about 8 years ago with really the intent of building out the finance team and taking it public, and have been leading the public company readiness efforts over the last 3 years, leading to our IPO last December.
Good morning, Mike Scarpelli. I'm the Chief Financial Officer of Snowflake. I've been with the company for a little over 2 years right now, and this is the third company I've taken public. I've taken ServiceNow public, Data Domain public, and then I was the CFO of 2 other public companies prior to taking these ones public, and excited to be here today.
Amazing. You guys both have such amazing experience, and also the relevant IPOs in the last year, which I think is people will love hearing about. Let me there's a lot of mystique around being public in Silicon Valley. Let me just ask kind of a fun question of both of you, which is just sort of like, what did it mean for your companies to go public? What did it mean for the leadership team, and what has it meant for you as a chief financial officer to be of a public company? And Ellie, maybe we'll start with you.
Yeah, I would say, we're one of those Silicon Valley companies that took a long time to go public. So, reached 4 billion in revenue and nearly 40 billion of gross booking value before we actually made the hump. And I think, in that period of scaling, ourselves, like several others, probably believe that being a private company provided some operational flexibility that once we went public, we would not have. And I would say, being on the other side of that milestone, I think it's much the opposite. Having gone through, the IPO phase, I think it's made us a much more disciplined company. It's made us a much more focused company, and really just stronger having gone through that milestone. So I think there's a bit of a reluctance, I think, over the last 10 years in terms of making that plunge, and yet I think it has the opportunity to make many companies a lot better. It certainly has in the case of Airbnb.
Yeah, in the case of Snowflake, going public really helped in a number of ways. First and foremost is probably the marketing brand awareness. Being in the enterprise software space, that is really important, especially when we're competing with the 3 biggest hyperscalers in the world today. And so it was really important that we had that brand awareness, and that brand awareness helps with customers. And having such a successful IPO really opened the doors up to the C-suite for us to meet with. They all wanted to know more about Snowflake as they saw the success of the IPO. But even more importantly, it's really helped on the recruiting front, especially internationally as we're growing in EMEA and APAC. A lot of good sales reps never heard of Snowflake before, but it has also helped too on the recruiting side. The year before I went public, I spent so much time with very senior engineers coming out of Google and Facebook and Amazon and Microsoft. I would get involved in help recruiting them, and it was really more selling them on the value of Snowflake. And so many of them just never believed in that value. They viewed their RSUs as that they were getting from these large companies, that was part of their normal take-home pay. And giving them, having a public currency really shows the value versus saying, oh, we could be worth X amount in a year from now, and this is the potential value. So that was really, really important. And I really agree with what Ellie said. Going public, and this is what I like about operating a public company, I actually prefer to be in the public company environment than a private. And the reason being is it creates discipline and a sense of urgency. Every quarter you got to report, and you need discipline to be able to do that timely and accurately. And I really like that environment.
What about for both of you, if we think about our audience of finance execs and CFOs, if you look back, and Mike, obviously you've done this a number of times, what was the team like prior to being public, and what is it like is there a difference? Are there folks that you need to add once you're a public company or in advance of being a public company that maybe our private companies don't have on their team today? Mike, I'll start with you there. Yeah.
No, good question. And almost every one of the companies that I've gone into, I really had to build the team and bring people in that had the experience, not necessarily had the position, but I knew they had the ability to grow and scale with that position. And that was really important, from getting a really good VP of finance with a strong technical accounting background. Tax, almost every company I've gone to as a private company really have ignored taxes If you want to be an international company and you want to deal in enterprise software, taxes becomes a very big issue. And I don't just mean corporate taxes. There's all kinds of indirect taxes. There's all kinds of payroll taxes, especially globally, that you have to face. And that's where you usually get burned by the indirect taxes, and most people ignore that. As well, you need to put in place the controls and structure from a deals desk to really strong sales ops. And almost all the companies that I went into, that was lacking. And so we really had to build that team. Doesn't mean got rid of all the people, because the companies that I went to had a lot of very good people. They're still with they're still with Snowflake, and that was the case at ServiceNow and Data Domain. But really augmented. And I think the biggest mistake that I see people have made when they're hiring and preparing to go public, they're hiring for the role in that point in time. You really need to think of, where's the role going to grow over the next 3 to 5 years, and make sure you hire the right people to scale with the company. And the problem you have if you don't do that, you do a disservice to those people you hired, because you end up having to hire above them. And if you create title inflation, you end up having to either terminate or demote those people. And the biggest mistake private companies make, in my mind, is that title inflation. Mm-hmm. So it's super important to stay in front of that as you're gearing up to go public.
I would just add
thoughts, Ellie, on team? Sorry. Yeah, go ahead.
Yeah, the way we approached our overall public company readiness efforts was not to necessarily look at the day or to really focus on the deal execution. It was to look across the organization and go beyond finance to say, if we look at each of our like sub functions, what would we like them to look like a couple years out, such that they were at least on the path to being world class? And let's start now on that path. And so we did that across each of the sub functions of finance, as well as, our compensation team, our internal communications team, really just trying to have a goalpost for each of the capabilities in-house that we would need to be a successful public company. And I think that aperture, obviously we haven't been public that long, but I think that aperture of thinking about what do you want it to look like when you're on the other side is very important, such that you're not just focused on what's the 6 months before the IPO and everything that we need to do to get across the finish line. You want to make sure that when you're over that milestone, you actually have the capabilities in place to keep you going to that next scaling point.
I totally agree with what you're saying, Ellie. And I think the other mistake people really make is they think going public is hard. It's not hard, it's just tedious and time consuming. It's actually much harder to stay a successful public company. And that's where the real work begins. And a lot of that takes the planning that Ellie was talking about.
So one of the things that a lot of companies don't have a strong competency around when they're private is investor relations. And, we know for public companies, that's an important part of the equation. Most private CFOs and CEOs are dealing with, a handful of investors at most, and usually they're on the board. It's a fairly close conversation. How do you guys think about IR? How much time did you put into that prior to being public? And what advice would you have for CFOs and CEOs who might be tuning in here and want to learn a little bit more about how to think about that function when it's part of their public repertoire? And Ellie, maybe I'll start with you.
Yeah, certainly. So before I had joined Airbnb, I was at Netflix in a variety of finance roles, including leading their investor relations team before I left for Airbnb. And so when I came to Airbnb, it was still early days for the company, but I had a bent towards we should be having those regular conversations with our investors. And so well before going public, we had a regular cadence of, providing investor letters on a quarterly basis, having regular touch points. And the bit of advice I would provide here is, I think early stage, you think of kind of that investor contact as a bit of an obligation in terms of providing them the, contractual information rights that they have. And what I think is a much better use of that stakeholder is leveraging them to get feedback on your message, feedback on your metrics, such that you can be iterating around your story in a somewhat safe environment with those existing investors, such that fast forward when you have a much more distributed and broad-based set of investors, you've gone through a lot of cycles to hear the feedback and know the questions that people are going to be asking, such that when you're writing that S1, when you're choosing your key metrics, you've gotten the feedback to inform what is going to position you best once you are public. So we've been, we just had a ton of contact with our investors through the years to really leverage their expertise and use it as a point of feedback.
Mike, thoughts?
Yeah, I'm a little bit different in terms of, I've been fortunate that all of the 3 companies they've taken public, I joined kind of within a year of them going public. That was I think I was on file in 2 of them 6 months after joining. And that was the purpose of why I was brought on. I do think it's important that you start to build up, especially if you don't have relationships with the biggest, whatever type of, you're a technology company or healthcare or media, those investors in the world. And at Snowflake, one of the things we did is we did in February of 19 do a private round, but in that private round, we brought on board a number of, I would say, crossover investors, late stage public, but more the private guys. And we really focused on the ones that could be those $1 billion plus shareholders as a public company. And once we did that, and by the way, all of them will say they need more, and they'll be happy with whatever they get, by the way.
And you give that advice often. Yeah.
At the end of the day, people are happy with whatever they get, but they're going to complain. But one of the things that we did, and it's really important, and Ellie touched on this a little bit, is as soon as we did that, we said, you know what, we're going to pretend like we're a public company, and we're going to host a call rather than just send out all the information that you're required under the information rights agreement. We actually wrote a script and everything like we were a public company, and we held a call with those 14 different public company investors in the private market that they did with us, and that went over really well with those people. And we gave them the same level of information that we would do when we were a public company. And I do recommend doing that. And then the nice thing today, you can test the waters before going public and go do your non-deal roadshows, testing the waters. And I strongly recommend you do that. I do think, though, one of the biggest misconceptions people have around IR is you need to have this big IR organization. When you're a young public company, it all depends upon the size. If you're a Airbnb or something that's going to have a lot of attention, you're going to want to build a big IR team. And when I say big, I don't know how big your team is, Ellie.
2 people.
But the same way, I literally had one person in IR, and that person played multiple roles, got actively involved in FP&A as well. Because at the end of the day, when you're a relatively young public company, people want to talk to 2 people. They want to talk to the CEO and the CFO. And if you want to go public, you better be prepared to do that. And it's both of you. And your IR person over time will start to take on more and more. But day one, I would say that first few months, 6 months as being a public company, be prepared that you will be the one doing a lot of the IR. And I actually find it quite enjoyable. I don't mind doing it. I actually like doing it. It's I don't think I'd enjoy my job as much if I didn't have that investor interaction. And I take a little bit of a different view too, and I don't view IR as a career. I think it's an important piece, but I like IR to be a rotation program, because I think, for instance, I think it's great if you're running IR and then you go run FP&A or you go do something else. I do like to rotate people into that role, and I think it's a great from a resume building for people. And whether resume building to move up within your company or, quite frankly, to go get a job somewhere else one day where they may want to do it, because not everyone can replace the C-suite, and you want to give people those opportunities to do that one day.
Love that. And maybe along the lines of working with investors and board members prior to going public, can you guys talk a little bit about the role of your audit committee, your audit chair? I think for CFOs and finance execs that have never gone through an IPO, for a lot of our private companies, they don't have an audit chair, and it isn't until they're 6 or 12 months out and they say, "Oh, we need an audit chair." And I personally think that dramatically undervalues that role. I think an audit chair can be incredibly valuable as a mentor and helping to get these companies ready to go public. But could you maybe just speak to your own experiences and interacting with your board, your audit chair, and your audit committee, and feel free to take that in whatever direction you'd like. And Ellie, maybe I'll start with you.
Yeah, I would say I've noticed this year in particular with all the SPACs, people are trying to fill that audit chair role, months before becoming public. And I think you've kind of missed the boat at that point in terms of really getting the benefit of a strong audit committee. So my recommendation, something that we did at Airbnb, was well in advance of actually having landed our audit chair. Myself and our chief accounting officer put together effectively a unofficial audit committee with members of our board who would be willing to attend, just to start building the muscle of what are all the things that we should be reviewing with an audit committee on a regular basis. What are the things that we're going to be held accountable in terms of managing the risk of this business, and just building that muscle gradually over time. So that's one. I would say get ahead of it, even if you don't have that audit chair in place. I think the second I would say is, once you have that committee or chair in place, leverage them. They should be your partner, providing regular guidance, and you should bring things to them early rather than later, so that you can get the benefit of their expertise and guidance, as opposed to thinking of them as someone from a compliance perspective.
Yeah, I would agree with everything that Ellie said. In my experience, I was a former partner at PricewaterhouseCoopers, and I have pretty good understanding of audit committees because I was always on the other side. And I do think the role of the audit chair is important, especially if you have an audit chair who has actually gone through an IPO process. I was very fortunate when I was at Data Domain. I had an individual, Ron Codd, who had taken PeopleSoft public and was the CFO for 10 years, but he was also, I'll say, a bit of an accounting nerd, that he was really into accounting at the Golden Gate University in his retirement, just for something to do. And he was actually a great resource for, he was one of these ones that had all these checklists and stuff, and I was never one of the people that have checklists. So I learned a lot from Ron through the Data Domain IPO, but just the experience I've had over the years. I do think it's important to have an open dialogue with the chairman of the audit committee. I meet with them formally once a quarter before the stuff, but then I talk to them on a regular basis. When we were a private company, I will admit, as a public company, he tends to reach out to me more than I reach out to them. But they add a lot of value and insight. And listen, most board members, independent board members, have a lot of experience running public companies, and you should leverage that. It's a free resource to use. So it's really important.
Yeah, we are huge advocates of private companies bringing on independent board members. They add so much value, and not that their investors don't add value, but we think that independent board members add a hell of a lot more value than the investors do, just being perfectly honest.
Experience.
Yeah. I guess maybe sort of building on that, what other folks do you think of as sort of critical to the process? Take yourself back to 6-12 months before an IPO. And I'm just thinking of, when we say to a company, you're going to need an audit chair, you've got to have a really strong CFO. What are the other components of the organization that you think of? And I'm thinking, like, on the FP&A side, Mike, you mentioned, most private companies are, reasonably good at forecasting, but I wouldn't say it's a strength. And obviously, once you're public, you want to be much better at thinking about your 2-3 year forecast and being able to communicate that with Wall Street and shareholders and analysts. Do you have advice for folks on, I guess, maybe specifically on the FP&A side, on how to think about their teams or functions or process, or tips that you'd share? And Mike, maybe I'll start with you.
Yeah, FP&A is one of the most important functions because, as you said, it's super important to be able to forecast your business, and you actually want to build a model where you can beat and raise and have confidence in that model. And it's really important too that your FP&A organization is actually really good at communicating across the organization and sanity checking things with sales, with engineering, with other product management, with other areas, and that's a real critical role. But FP&A isn't the only critical role. I think the more critical role to getting ready to go public, and not even a role, is systems. So many people underinvest in systems, and there are so many manual processes, and manual processes are ripe for error. It's super important before you go public to invest in the right systems, and systems that are scalable with your business. And a lot of people also, I find, leave a lot of their 404 SOX work to say, oh, I got 1 year after going public to actually meet the requirements? Well, day one, the CEO and CFO have to sign a certification that you have the proper controls in place. And it's super important that you actually build those controls before going public. Doesn't mean they have to all be working properly, and you can have some deficiencies that you're working through, but you want to make sure that you're going to be able to meet the SOX requirements once you're public. And I'm also a believer too. A lot of companies like to just outsource that to third parties. No, the people in the finance department, and it could be in sales or product management or whatever, has a key role in the controls. They need to own those. They need to be involved in the design of those controls. It can't just be given to someone else that they design them, and it gets thrown over the transom to the owner at every quarter to check off that they've done things, and they may disagree with them. It's super important that there's ownership of the controls within the company. I think that is one
Mike,
thing.
I just want to press on that one, because that's one that we certainly don't spend a lot of time on as private companies. Is that do you have somebody on the team who owns that? Is it a group of people that own it? Is it something that you do every month where you check in with folks? How do you coordinate that across the organization? Because SOX does touch so many parts of the company.
Yeah. So I built an internal audit function up at the last two companies, and that was more of a function that I was required to. And I got to be honest, I was, because we went New York Stock Exchange the last two. I know this is NASDAQ. But I thought this is such a waste of money initially, but I got to tell you, there's a lot of value that you get out of internal audit. And my internal audit leads have always been instrumental in working with the control owners on the design of those controls and making sure that they're effective. But it's super important that internal audit doesn't own it. It's the business person. And so I have a pretty big internal audit team. Not that it's expensive, but I have a big internal audit team. And the nice thing about COVID, it has shown you can do things remotely. So I'm building more of that function in India, in a lower cost area, that it doesn't need to be in a high cost area. Yes, you need to have some people, but you can do a lot of these things remotely to work. And there's a lot of stuff, especially around the IT controls, that is important. That's where most of the errors tend to be, in the IT controls.
Yeah. Ellie, how about on your end? FP&A, SOX, what other functions do you think of as like typical private companies aren't quite where they need to be? And I'm just trying to think of advice we can give folks to.
I was going to give a answer, actually. I have a bias for the importance of FP&A because I've run that at both Netflix and Airbnb. But I think the systems is really that long pole. If you're trying to figure out, do you have the right financial system 6 months before an IPO, you probably don't, and you're not going to get there in time. And making a lot of those fundamental systems change right after going public is probably not the right time. So that's an area that I think, it can catch up on you with regard to not having enough time to do the things that you need to do. And so it's probably an area where, even if you've filled those major leadership roles on your finance team, you should think, do we actually have the technical skills either in the company or in finance to directly support financial systems? Because it's so crucial. And I think you can scale to a certain level without a level of complexity on the systems, but it breaks down. And do you want to be public when you're having that kind of descaling moment and your manual processes no longer support the business that you've built? So that one I would just put a big flag on, given that it's the time cycle required in terms of putting things in place is quite long, and so you can't do it last minute.
Yeah, I would say
go ahead, Mike.
I did an ERP implementation while going public.
How was that?
The triple Lindy.
Very painful. And then I did another ERP implementation right after going public at my prior company before. So I made sure we had our system in place before we went public here.
So my advice just stands with those two experiences.
Yes, much easier to do in advance.
It is such a challenge because so many of our companies along the way, as they're being built, Mike, you mentioned, they outsource functions, right? One of the ways you grow quickly is you bring on third parties that handle different functions. And then, when you want to go public, you've got to bring a bunch of those functions in-house. And we've seen teams really struggle with that. Just hiring the people to do the work can be a challenge. And they end up pushing out their filing time or pushing out their audit timelines or whatever. And so, again, back to the point of us trying to help these companies think about it 18, 24 months and sort of think about what that date might look like and start hiring the people, putting the systems in place, getting the right processes in place.
Yeah, I'm not a big fan of outsourcing. I don't mind having bodies augment your people, but your people need to own it. That's the important piece. And I see too many times where it just gets thrown to a consultant to do, and it ends up taking longer, and you end up having problems, in my experience.
What about, I just threw that out there, the timeline. You know, I've had several companies where they've said, we'll go public when we're ready. And, you know, another board member will say, well, why don't we get ready to go public? Like, let's kind of look 2 years out and plant the flag and come up with a roadmap and figure out all the things we need to get done. You know, rather than having it be a surprise at a board meeting. What advice do you give to CFOs in particular who are probably thinking about a lot of the things that we're talking about, maybe even more so than their founder CEO might be? What advice do you have for them on time frame to prep and time frame to be ready? And I don't know, just any general guidance that you give CFOs when you speak with them? And Ellie, maybe I'll start with you.
Yeah, I think earlier in this conversation, I mentioned at Airbnb, we did a whole public company readiness program, if you will. And it really was looking across the organization to say, what are all those things that you wish to be true once you are public so that you can actually be good at being a public company, not just get over the finish line. And that was actually a kind of 2 to 3 year effort, just looking across those surfaces and really doing an internal audit to say, what are we good at? What do we have in place? And what are we missing that, you know, is going to take us a while to either get the people, get the processing in place, or build the systems. And so I think just having that honest dialogue internally with regard to where you are across a variety of functions is very important, so that you're not you know, caught you know, empty-handed when the board calls and says, you know, we're going forward with this.
Right.
You know, I've been very fortunate that when I was brought on to all three of the companies that took public, the purpose was to take them public. And
yeah,
they had all said it was going to be a 1 to 2 years before going public, but I have a CEO who likes to accelerate things, and so
yes, you do.
prepared day one from the first board meetings when I went into them and set out a timeline, and this is what it would take. You know, the biggest thing, that the biggest time consumer in the prep is actually, in most cases, and I've had this for me every time, and many of you guys that are listening to this will have this, you have to go back and re-audit your numbers, because you never really did. You never did hard cutoffs for quarterly information. And that's what takes most of the time. But generally, from the point in time when you decide you're going to get ready to go public, it's usually 6 months to get on filing, your first filing. You could do it. It's hard to do it quicker than that unless you had your audits and everything done. And once again, it's not hard, it's just time consuming. Be prepared for long hours.
Yeah. Well, guys, this has been almost a half hour of our time, and I just want to thank you both for doing it. We love when folks take time to share advice and thoughts with the community. Anything we didn't cover that we should have covered that you're like, oh man, this is top of mind, and this is something I always get asked that Jeff should have asked me? Either of you?
Nope, you sound like a banker that asks those questions. Is there anything I should have asked? No, I'm good. I'm good. Thank you. I enjoyed doing this today, and happy to follow up with anyone that wants to talk more.
Likewise.
Awesome.
Thanks for having us, Jeff.
Thank you both. Thank you both. Really appreciate it.